What's up, guys? How we doing tonight? I was a little bit of a chill mood with that song. Been raining all day, so that's how I'm feeling today. If you guys were wondering. Can you guys see me all right? And also, can you see my screen all right? Just give me a quick confirmation. Awesome. Well, if you guys were on your charts today, I don't need to tell you, we had a shit fucking day, right? All right, I'm gonna be straight up. That's what it is. And of course, when we're trading something like NASDAQ, right, we all know you have these consolidation days. And on the first day of the week, it is kind of to be expected. It's gonna do one or two things, right? As we discussed in our weekly outlook. We can see consolidation, which you can frame as accumulating orders for the weekly direction, or you can see a very aggressive move that will form one of the week's extremes, right? The low or the high of the week in specific context. Now, for me today, we didn't have any of these things except consolidation, very small range after that initial London move. If we look right here at just the daily range, you can see we're looking at 208 handles. So decent range, right? Filled with opportunity, but that range was done during London. And if we look specifically at New York, your range was 108 handles. So all that to say, it was a very, very tight range today. And yes, there was opportunity, none that really interests me except one, which personally, my day looked as I took one trade. It was a loss. I saw the conditions and I just decided not to waste my time. So if you stayed on your charts up until 10:30, which we'll discuss about how you can come to that understanding, you would have had a nice short opportunity. But other than that, to me, the day was consolidation. And I always say to utilize the 15-minute time frame, right, for our intraday analysis. Let me just go in replay mode so we don't have that new daily price action and we just see today. And I'll even remove New York Open. If we just look at the very simple price action, and I still have the drawings from my Outlook, I kind of don't want to lose them. Well, I mean, it's all recorded, right? So let's just delete that for now. All the drawings from the Outlook, let's remove that. Awesome. And now let's get back to specifically today. The line you see here is your daily divider. This is your Sunday opening, right? Opening price. Just a tiny new week opening gap, which, you know what, why not? Let's showcase it. Um, let's just do it correctly. So you're looking at 1645 close in this very specific case, and you are looking at the opening price on the next day. So this is our new week opening gap. Basically, London went super bearish, traded back into it, undoing all of that Asian movement, and then left very big liquidity higher, right? Asian highs. That was a clear objective for me. You return to midnight open, then that would frame a possible manipulation of the week where we could see a bearish week after taking our objectives that we spoke about before. But as we talked about, right, just look on the 15-minute. Whenever you want to know if it's consolidating, just look, are we creating intraday fair value gaps? So looking specifically on the 15-minute, are we creating fair value gaps? No, no, no. Right up until noon, where we did. And what did we do for the rest of the day? Well, we went to take out liquidity. And from that point on, you just retraced to that fair value gap and consolidated to a close. So definitely not a nice day. If you're asking me, all I see is consolidation. These are the days where my model is not supposed to perform. So it's either I get a win because I was lucky in not trading the one that would have been a loss, so I end the day on a slight P&L win, or I do the opposite. I traded that one and that one failed and the other one would have won, but that's just variance. It ends up, like I said, right, I'm on a $500 loss today. So small loss, but we can take it. If we go down to the 1 minute, right, because there is no framework I see, because as we always say, right, when London has a large range, which today kind of a decently range, not something I'd consider especially large, especially when we're looking at London average range levels, which are available through the Right Statistics app if you guys have access. Holy shit. Sorry about that, guys. I'm feeling a little weird today with all that rain outside, feeling a tiny bit sick, so But just to get back to price, so not an unusually large London range in this specific case, but I would expect a move to the upside. That was my idea, and we also had news at 9:45 today. So if we walk through everything, well, I would have not been looking for a trade right up until that 9:45. That's just how I personally engage with news. And if we look, what do I look for in news? I look for, very simply, a Judah swing. Did I get said Judah swing? Well, if I look just on just on Nasdaq, not really. But once we compare on ES and we see that SMT was formed at this level, then that confirms my idea. So let me just make this a little bit more visible for you guys. Judah swing lower, formed with SMT. From this point on, you can now start looking for longs. This was my plan. This was my bias. But since we were so close to the 10 a.m. open, I did not take this long here. So that's just, again, coming with variance. We just entered the macro. 10 a.m. open is here. I'm going to wait for my 10 a.m. power of 3 to confirm my idea. So I'm not necessarily going to need to take a unicorn from that point on. But I did. If we look specifically, and it's going to be hard because with hindsight, all you can see is consolidation, right? But from that point on, I saw, yeah, okay, high resistance conditions, sure. We have formed SMTs on both sides of the range. So that's just on me for not noticing this specific move. Because as I always say, this is something I feel like I repeat every week, right? When there is SMT on both sides of the range, that is your confirmation that we are consolidating. And what do you do when we consolidate at New York Open? You wait for 10:30, right? The ones that are here often are probably tired of me repeating that specifically, but that's what I should have known today, and I actually failed to notice. But technically, you should have been waiting until 10:30. Now, taking that into account, if you did not see that SMT on the top of the range, well, personally, for me, I looked at our 10 a.m. open right here, which you can see with the blue line. I saw us open into a low. I like this movement, retracement to the upside. And if you see, we actually formed a bullish breaker block right here, right? After trading above this high, because you took out the lows of this range and then traded back above the highs. And you have a nice little inverse fair value gap right here, which you could have used for an entry. This is the loss I'm talking about. I personally got in this trade at 10:02. I had a very tight stop in this case. I had my stop right under the IFVG candle, just because with a wick this big, I didn't want to see us trade back into it. But if you saw, if I had the right stop, I could have probably gotten, what is that, almost 1R even then, right? So that idea to me was valid. It was just a day where you did not get the result you were looking for specifically, right? And if we're talking about objectives, I had my higher time frame objectives above, right? As you can see, this is Asian highs specifically, so current high of day, and you have your higher time frame objectives right here. If we add our standard deviations, you'll see they line up beautifully. As I said, always use the wider range, right? Because I can also use the specific ones to my breaker. And if I pop up 3 standard deviations, they will line up beautifully. But I like to use the wider range, which is oftentimes just a 5-minute breaker block. Previous week high as a bias 2 and nothing above midnight open was very confusing today. Yeah, it's just a day with consolidation. So how can you explain that? Well, it's simple. It doesn't do what it is supposed to do, what you expect it to do. Because we're consolidating. We have to accumulate orders. This is a range profile. So what are you going to do? Well, search and destroy. You're going to go take out highs, to then go take out lows, to then go take out highs, without ever having a clear breakout. But to me, building all of this liquidity was a clear draw after this consolidation. So if you did the right thing, compared to myself, right? I can't expect you guys to do the right thing if I'm not doing it myself. I did have, basically, I just decided to stop trading after this instead of waiting for 10:30 and then trying again. But from 10:30 onwards, I'm looking at the opening range specifically. What is the opening range? 9:30 to 10:30 range. So let me just make that a little less aggressive in your face. Opening range, looking at 930 to 1030. See the sweep of this important liquidity point, right? So it's exactly like when we look at session highs and lows. I understand that this level in liquidity will more often be used for reversals and is of higher importance. I don't have to push it further and say, oh, that's how we interact with that level all the time. No, I can just make it simple. And the draw would have been, in this very specific case, opening range low. But if we look right here, we didn't get it on either asset before retracing all the way up pretty much to that high we made and then going to go get that level. So to me, if you took that trade, let's just showcase it. I know I saw some guys in Discord today who took that short, so good stuff for noticing it. If we look, we have breaker block right here. Let's just have the right color set up and overlapping PD array. Very straightforward. You had nothing else possible to use. Stop would have been very easy at the swing high because you only have 2 PD arrays blocking your trade, so you would hold it up until the swing high. Sorry. Also, something very important to point out, SMT at these highs, right? You can see it on ES right here. You had beautiful divergence. Is that the breaker blocks? There's no swing point above the breaker block. Okay, concentrate on the movement. What is the movement here? Well, we formed a swing high here, all right? So swing high at this level. Then we went to form a swing low. Then we went back up here. Then we went here. Then we went here. So if I just move that aside, what's my breaker range? This move. So I'm associating the older swing point with this swing point. I don't need anything else. And it's not drawn perfectly right now. But this is not my breaker block, but my breaker range. And then in this range, I'm looking for the last down close candle in this case specifically. And let's be honest, whether you saw this as your breaker, this as your breaker, or even we can probably go like in a lower time frame and find another breaker, the importance is not in where specifically, it's in the pattern forming. And then taking that PD array in alignment with that range. So I don't need to know if it's that. I need to know that this is my breaker range. And then if I want to be specific, if I want to be precise, I'm going to use the last down close candle in the case of a bearish breaker. Again, with that stop right here, where would be your low-hanging fruit? Well, utilizing, as always, standard deviations in confluence with liquidity levels. You have, well, first of all, with all this low resistance, I expected it to go first, right, one way. But you're always going to be looking to take profit. I'll share my executions that I had on my challenge accounts because, as I said, on my fundeds, one and done, took a small loss today. But this was my objective, lining up with 2 to 2.5 standard deviations. But as you see, we didn't even reach there. But if we look on ES at the same levels, we didn't even come close to this one, but we did take out this higher one. So we formed SMT at this level. I'm going to move this red line so you guys can align visually. So this is SMT. NASDAQ barely did not reach it. SMT, reversal range from my misdrawn standard deviation, sorry. So from my standard deviations right here, reversal range, this could have been your low-hanging fruit objective. So technically at this candle, but if we're being pessimistic, it's probably at this swing low because by the time you notice there was SMT, you probably had at least 50% of the candle retrace. So is it a nice trade? No. Is it a setup I'd be happy with taking? Any day of the week, right? So just the result wasn't the nicest today. And yes, we can speak about how, oh, well, see this perfect unicorn right here, or oh, look at this perfect unicorn long. Okay. How would you predict it? Okay, well, from this point on, you took out sell side liquidity inside the new week opening gap. You can look for upside. But okay, that was a hard one. What have we done as of now, right? Today, consolidated. Okay, so how often do we consolidate in the AM session and then expand in the PM session? Okay, well, I have the numbers for that. Do you? Because if not, you have nothing to justify your trade idea. And the truth is, the numbers are very low. very low, under 30% of the time, and that 30% is pretty much clutched by FOMC due to the fact that when you have PM news, you oftentimes consolidate in the morning. So just to tell you guys, when we consolidate in the AM, I'm not even looking at the PM because that's just a waste of time to me. And yes, you can say that, hey, on ES, look, the delivery was nicer. We even returned to midnight open as well afterwards. We hit our higher time frame objective, right? Well, higher time frame. The equal highs we formed with Asian highs, and we also had, if we go on the daily actually, that was the same level we previously took out, right? It's just still on the chart. I didn't want to showcase that. So basically on a day like this, and I know it's boring to see a price action review where we look at a day and we say, hey, you know what? Truth is, this is normal. It's okay to be a loss because it was a shit day. And that's what it was, right? The best way to have a successful day on a day like this is not to trade. So if you notice the consolidation and didn't trade, then good for you, honestly. Did better than me today. Personally, I failed to see this SMT at the highs, which is why I'm currently working on making my own indicator on that is not like the ones that are currently available. I want to see the SMT as soon as it forms and then just delete it if it gets invalidated, but just update it along the way. So that's going to be coming at some point. I'm not gonna lie to you guys, the app is taking 100% of my coding time at the moment, and I do want to bring that out before considering any sort of other indicator projects. But once we get there, there's definitely going to be some work to be done to get that out to you guys. But in general, SMT, wait for 1030. 1030 right here. What are you looking for? You're looking for one side of the opening range to be hit. That side of the opening range got hit right at this level, forming with SMT. Displacement created a breaker block. That's a beautiful setup that I take any single day. Just the result was a little bit underwhelming, if you ask me. As I said, in these types of scenarios, I either took a little bit of profits here, or I saw the reaction after the SMT forming and just decided to close my trade somewhere in this range, which, let's be honest, if you have very high consistency, 1.5, 1.7 R, that's a winning day in my book. Definitely a lot of bullshit. But as I said, on a day like this, I'd be happy with not having a trade or just having one loss. Because in the past, and seeing all of you in here, a lot of beginners have blown accounts today, just trying to trade this. Don't waste your time. There is no point in staying in front of your charts even when we see that. When we consolidate on New York Open, I wait till 10:30. If I get a setup, I get a setup. If not, I'm done for the day. This specific case, I did not wait till 10:30, so I had my one bullet, and then I was done for the day. Do we have any questions? I know it's a pretty boring day, so not many price action questions that you guys probably have, but I'm open to anything. If you guys have questions about the model or the risk management or the specific rules I outlined here. I'm going to give you a sec to type out, Justin. Perfect explanation, all clear here. Well, thank you very much for that. I appreciate it. You risk 1% per account. I do not. So I have very specific rules depending on the account I trade, because currently my situation is, well, pretty straightforward. So I have prop accounts that I do trade with lower risk. So for example, I'm at 0.5%, about 3/4 of the time. So 0.5% risk per position. And yes, that is per account as well. I just like to group them together when I think about that, because I copy trade all the accounts together at any point in time. So that is a very straight up risk. But when I'm in drawdown, I cut it by half. When I am in low resistance, well, not low resistance, low probability conditions, I also have specific rules that dictate if I need to full risk or if I need to half risk the specific trade. How much would you risk on 150K combine percent wise? 0.5, $750. That gives you plenty of tries. If you're losing 6 trades, and I'm talking specifically with my model, right? Some people are playing lower win rate, high R strategies. That's just not how I roll. I roll through consistency. I have extremely high consistency, and I'm risking 0.5%, and those are on Apex accounts. So if we're talking specifically about a prop firm that has end of day drawdown, right, meaning they don't count your drawdown until the end of the day, I'm out there risking 1%, and on evals I'm risking 2%. So just making it one shot, one kill pretty much on the evals, and then once I'm funded, 1% risk with Top Step allowing all that. I'm very happy with 1% risk per position. And also, yeah, that's what I wanted to point out. I also trade my own personal account, which I trade some sort of intra-week swings. So I just trade based on where I think the weekly direction will be. I wait for one extreme to be formed and I just enter randomly. So I don't even look at a specific entry level. I just have, okay, well, now the low of the week has been made. I can enter. I'm looking for like 1 to 3, 1 to 2R most of the times, and I'm out there risking between 2 to 5%. So that's my personal swing trading account. Took the same trade that you took, but stop loss at the low of the order block, so partial and break even stop. Stop loss at the low of the order block. Your stop loss was here, is what you're saying. That's a little confusing. Did you mean at the high of the order block, which is where the stop currently is? No, your buy. Oh, okay, right here. Yeah, stop at the low of the order block, which it should have been. And then you held on all the way, managed to get a partial at this level. Beautiful one standard deviation, by the way. Bread and butter objective. Nice. I didn't hold on to that. I can't hold on through all this consolidation. Yeah, very low risk to reward on that one. But as we framed, consolidation day, right? Too big for me. You're chilling, Brian. Just take it slow, right? Whenever you guys, we're talking specifically about props here because that's the space we're in. That's the opportunity we have. And specifically for me, I was super young, so going into props instead of having to save my own money definitely did help me at the beginning, even though did not turn out so well in the early stages. But I would always recommend going for smaller risk because the truth is, do you really care how long it takes to pass it? Because it's just like trading. Do you really care how long it takes to learn how to trade? No, because at the end, you know it's going to be worth it. There's no question about it. You see people like me here, let's use Kane. You see people like Kane making 2 mil in 3 months in front of everybody. Once that starts to come into your mind, you'll actually understand that no matter how long it takes, it's going to be worth it. Like he's been trading for 8 years, right? So for me, it's the same thing with whenever I approach anything in life. So just go the slower approach because it's going to be worth it in the end. So in the case of specific prop firm challenges, I pass them in a day or two because I don't have that time to waste and I don't mind wasting the capital because it's coming out of other accounts payouts. But if you're just starting out, don't waste your money. Just, okay, let's have high risk. Let's try and gamble our way to it. Just go slow and steady, right? Risk 250 to 500 bucks per trade, no matter your account size, right? Keep it small. If you're trading a 50K account, probably lower that a little more, even to 100 to 250 per trade, and just go slow and steady. Doesn't matter if it takes 1 or even 2 months at that point to pass your account. Because as we said, it's all going to be worth it in the end. Does that make sense? Gonna give you a sec to type out, Brian. By the way, I just want to give a quick thank you to all you guys for showing up in numbers tonight. It's nice to see a few new faces, so thank you all for coming. I do appreciate it when a lot of you come here to these live events, and it's the time to ask me questions, especially with beginners. With opening in the PM range, you're not looking for short. Okay, so it comes down to one very simple understanding, okay? It is some trades have a certain probability, right? So some trades will work this amount of time. Yeah, I do understand. Wait, let me make sure. With opening in the PM range, you are not looking for short. So you're talking, am I looking to short at the open of the PM session? After taking the PM high. Oh, previous PM high New York, you mean right here? The previous PM framework? All right, so let me just mark this out. I'm actually going to delete the other drawings because it's starting. Oh, I just removed my analysis. I'll do it again. If we just frame that, we have previous PM high. Opening at 9:30, we are taking out this high instantly. We can short. The only reason why not is because of 9:45 news. So in this very specific day, we had, I forget which news, and as I say, I don't really care. I just remember it was a basic news. Let's just go check PMI. So we had PMI 9:45. So I'm waiting for that specific news. And when right after the news, we give a bullish setup and then we go back to this level, I understand that today specifically, we're not going to refer to that. So your short opportunity was pretty much from here to here. These intraday draws on liquidity, I shared publicly, right? You can find the thread in my highlights tab on Twitter. I shared the trade. I can't speak today. I'm feeling a little bit sick. Sorry, guys. The thread on Twitter, I shared the monkey approach to these frameworks, right? So no bias, no filtering, just brain dead. Intraday draws on liquidity, one trading setup for Live by ICT. And these are pretty small win rates, right? We were looking at like 36% win rate for the previous PM session framework. And the reason why that is because you have to be able to filter it. So it's based on bias. My bias today was bullish. I was looking for longs. So I was not going to take a previous PM framework short, because anytime we're going to be looking for a long setup and we're going to open, basically anytime we are bullish on the day and we open within the previous PM range, we're going to invalidate this setup. It's going to be a failed previous PM framework because we were bullish on the day. At least specifically, that was my bias for the day. So I just used my bias to filter these setups specifically. This was why I didn't talk about it today, because I would have been looking for previous PM lows to be swept. And as you can tell, with last Friday's PM session, that was not going to happen on a consolidation day. Does that make sense, Freeze? Too big for me. I was about to stop loss objection, but GG to him, definitely. Yeah, I know. I saw the no need to comment, but I still, it's that short setup, that long setup. Sorry, guys, that you took. It's like if you had your stop right all the way down here, barely did not get stopped out and managed to take some money out. But the truth is, for me, just going here and being in and out quickly is what I like. Because when I'm right quickly. I'm not supposed to have to wait there. So just personally, that's the thing. But when I teach students and when I talk to beginners, I tell them you're either 100% right or you're 100% wrong. There's no in between. There is no play with that. So you're taking your entry, you have your two objectives. So you have, for example, I'm just placing random levels here, but you have your partial. Once partial is hit, let's just act like it was hit. Once partial is hit, stop loss, break even, allow it to run to your final objective for a nice whatever R that is, because I just put a one tick stop. You miss 100% of the shots you don't take. That is true. That is true. But don't start justifying gambling on the markets for that, please. Do we have any final questions? Oh, there we go. Jez, what's up? Do you watch a 1 hour time frame? There was a bearish fair value gap. I use very specific time frames for very specific analysis. So that's why I always call, for example, the 15-minute time frame my intraday time frame, which means that anytime that I'm looking for an intraday move. So for example, the morning we expanded higher and now I'm looking for a PM continuation. Well, I'm going to look at the 15-minute time frame to see if we reached our retracement objective. But in the case of the hourly, that's my intra-week time frame, which means that I'm only going to be looking at the hourly later in the week to frame the weekly extremes, the weekly profile specifically. That's the only use I personally use in the 1 hour. I know a lot of people though who use like time alignment and all that stuff. I don't personally believe in it because the truth is all the time frames should be telling you the same thing. So what does it matter if I'm using an hourly fair value gap or a 4 hour fair value gap? It is the same idea. So I trade distribution. I trade the move towards my draw on liquidity. I don't trade manipulation. Well, 95% of the time, I don't trade manipulation or try not to, I guess is the best way to put it. So I don't want to go on a rant right now, but I don't believe in all that time frame stuff, basically. But I'm just saying I use specific time frames to come to specific analysis, and it's just a way to see the movement better based on the time window I'm looking at. So hourly time frame, intra-week time frame, I only look at it later in the week to frame my weekly profile and my weekly extremes. Does that make sense? My pleasure. Just gonna let Justin type out real quick and then we're gonna call it a day for tonight. As always, thank you guys for coming in numbers. I do appreciate that. I wish you all luck trading tomorrow, right? Good luck trading tomorrow. Have a great night, and we'll see each other tomorrow for the other PA review. Have a great one, guys.